let's talk more about the apartment market
Let's do.
I've been getting so excited for spring leasing season. And it really starts kicking off. It started in April. January, February, they're pretty slow. The winter months are the slowest. December is the absolute slowest. January, things like there's a sign of life. February, it's not good business, but people are signing leases. March, people are waking up. April, people are moving.
Yeah.
By June, that's typically every market is a little bit different. But June is typically like the peak where you're signing the most leases, and it's a month where you see the most rent growth. So we've been following, the last couple of years because they've missed some of the seasonal. The seasonal trend was there, but it was significantly subdued.
Yeah.
Not that much rent growth in the summer, but certainly not enough to make up for some of the declines, especially in the southern states during the fall, winter, and spring months.
Yeah.
In general, and I'm just going to skip ahead, Matt, to this is fine. United States median rent between 2017 and present. If you look at this graph, not to get too technical analysis on everybody, but it's lower lows and lower highs.
Yeah.
It's not a great trend, but you can see that oscillation between the strong leasing season, the slow leasing season.
Well, you look at it right now. It looks like a long-term growth trend pre-pandemic,
yep.
And then post-pandemic is just a long-term trend of decline that may be flattening out, arguably, but there's no real way of knowing right now, especially with the numbers that we saw this month.
And where we've seen, like, if we go back to 2019, where again January basically was negative, but then February a little bit of growth, then March, April. Some really strong growth. It pretty much grew until it peaked out, and basically again June or July, and then you start seeing a little bit of declines to a period of a little bit of negativity. We kind of missed out, in April. March we had some good growth. We were kind of on trend, similar to where we were, a little bit better than 2024. But April really things started falling apart, somewhat how they did last year, but a little bit more. So the question is this negative sentiment that's seeping in? We're not seeing the growth, certainly not the recovery, or is this still, we're dealing with the hangover of the oversupply? We just built more apartments than we have since basically 40 years ago when supply was peaking in the 80s. Are we vacancy rates are also peaking to higher than pre-pandemic levels?
Yep.
Is this just getting out of supply? Is this potential fears of recession and hard to make decisions? What's your take on the lackluster, unexciting growth, but growth nonetheless?
I think that at this point it's probably still the shaky supply situation. We're coming off of a great deal of supply. I don't think the economic uncertainty is hurting it, but I have a little bit of trouble thinking that this uncertainty. We just saw the consumer reports where people's present situations were okay.
You would think people are going to renew. They're not. They'd be less likely to go and look for a new apartment.
Yeah. So I'm a little bit. I would be unconvinced that of the past 3 months that sentiment has really impacted the apartment market, but especially considering that during the pandemic it really took a whole lot, took the shutdown of everything ever, and it really and even going back to the great financial crisis of 2008, where rent growth was not as affected as other sectors, it's still relatively insulated, I would say, from what you see in the stock market. I think that
there was a little bit of rent. There was definitely rent decline during the financial crisis.
Yeah.
But it bounced back in a big way, and it wasn't a huge fall off.
And what I should really say is it's probably less reactive than the stock market. These rent growth numbers, and are probably the result of supply. But I think it makes it more vulnerable. And if you're chipping away if you are leaving people vulnerable when it comes to supply, then their economic uncertainty may show up a little bit. It show up on the negative side too. Because I made the point a month ago, now if once supply kind of kind of equalizes with demand, job growth is going to be a factor. Well, right now job growth's a factor, but it's in the negatives. When I was maybe had rose-colored glasses on, I'd think job growth as a positive. But now I'm even reading headlines as I was gathering data for this report that job growth you can't really count on that now for rent growth, and it's partly because of supply, but partly because everyone's in this wait and see. So that's I think that also, and I was noting this too. I think my whole point that I had really in January is that we may see the same amount of rent growth in 2025 as we saw in 2024. I think that's probably the bigger thought that I have here is, as this supply environment improves, as things do come into a balance in a way that's would be arguably better than 2024, we're still probably going to see the same rent growth, because maybe that will be equalized by the uncertainty that people have and this kind of stay put mentality.
We still have to kind of wade through the supply. So, Matt, let me ask you this. We're talking national numbers.
Mm-hmm.
How helpful is talking about national averages, national mean? Because we know that the different regions, different markets are behaving so differently. So, I mean, could you just talk a little bit about some of the differences and why even look at the national numbers?
I know, it's a good point.
But tell us about some of the differences.
I think that we can scroll down to get their list of the top markets. But I also think this is another refrain that I've been calling out is, I think we're going to see a continued divergence of the top performing and bottom performing markets. But as we've talked about many, many times.
This is an interesting metric, Matt. Not sorry to interrupt you, but their list to lease index comes down from an all-time high. This is the time it takes to lease, how long an apartment sits on the market on lease.
Yeah.
So it's been at an all-time high, but it has come down slightly.
And I wonder if this is
trending up.
Yeah. So it is trending up, and it's come down from that peak, but there's generally a peak in January. So you never know. And I'd have to read this like sine wave here to determine where the trough is. But I think that's interesting.
Yeah. But let's go to some of these markets. As you can imagine, driving falling rents in the Sunbelt markets, specifically Denver, Phoenix, Salt Lake City, Raleigh, Jacksonville, San Antonio, and Dallas.
And then
let's go. Here's the list.
Yeah, and then
New York City, top spot, by the way.
And it's 4.9% rent growth. This is what I was saying. It's like it's not out of the question.
Maybe rent control is a good thing.
It's I don't know what the cause and effect.
Looks like it's really helping out New York City.
It is helping out some landlords that are enjoying year-over-year rent growth. It may not be helping out the renters rent control that would rather spend less money on rent than and have more have more buildings out there for them to live in.
I mean, New York, Los Angeles. Not Los Angeles doesn't have too much rent growth. It's 0.1. That we're just looking at. These are big markets.
Yeah, I think they're sorted this one by population.
Oh, that's no good. Let's do a rent growth.
Yeah, but I think that regardless, I think New York City is ranked among the top ones here.
It definitely is. I can't seem to get this widget to work.
I think they have it in the paragraph. It's somewhere up here. They talk about how the Midwest markets like Kansas City and Chicago are strong performers, and it's right. So if you keep going below, there's a big blank spot, and then there's that paragraph where it says markets across the North. Providence, Rhode Island's doing well. Washington D.C., Chicago, Kansas City, those are all doing, I think, really well. And as we noted, rents are growing in New York City. It doesn't mean in New York City is at least part of it has rent control, and so it's a complicated issue. It doesn't mean that it keeps rents down below everything else. It means it has the mixture of rent control and apartment supply can sometimes come at the expense of the renter in some cases. Now, in harkening back to that New York Times article, it's funny, they had the case for and the case against, and even in the case against rent control, they carefully noted that, yes, there is a case. It used to be widely accepted. However, some economists now are questioning the long-held belief of rent control being a net negative for the relief of housing demand. So I'll have to look up those.
I don't believe I haven't been able to find an economist who thinks it's sound economic policy.
Yeah, I'll chase down those links.
Plenty that think it's a horrible idea. I mean, it's basically it's price fixing.
Yeah.
And usually like a central figure, like the state government, doesn't exactly know like the best prices.
Yeah. There's an intuitive idea. I think I'm going to read into and see where they're linking on these on the objections to this idea that rent control is not necessarily the best thing because maybe there's not one solution. Who knows? I'm not exactly against it. That's why I thought, if you're in Washington and you have that plan for those 12 years, great, but I think it complicates things and it creates some uncertainty for the builder, uncertainty maybe for the renter, but you can't react from uncertainty to try to grab away someone else's certainty. It's just kind of like there's a way to go about these things, and I don't know if it's with more government control over stuff.
Just over-regulated industries don't tend to get cheaper.
Yeah.
And if the goal is to make things less expensive, over-regulating isn't going to be the solution.
And it does expose the fluctuations. It makes things unpredictable. If instead of, and maybe it does make it cheaper. Who knows? But it does make it more unpredictable because if I'm a landlord or a renter, I know what rent growth, or I know what's going to happen. That if it's market forces, and I can study the supply trends and say, oh yeah, rents are getting cheaper, nothing's going to be happening that's weird here. But if it's determined by like government's in charge, they could change things one year for the next. You kind of don't know where the lines are going to be drawn, especially
whether you're a renter or you're an investor.
Yeah.
So I'm going to invest in Washington today because I understand what the policy might be. But as we said, California's looking at changing it. Don't mean to go back on that article, but this is a really good apartment list piece. I'm going to be continuing to look at that days on market, that data set, because that's going to be interesting to continue to track and see if that changes. And we'll be monitoring on a week-by-week basis, more than just month by month, to see if we see a pickup in leasing velocity. I mean, and again, we'll have to break it down. Really need to break it down market by market because just in the Midwest, the markets we're in, I mean, they're different. We have some markets like Bloomington, Indiana right now. There's a lot of new supply that's been coming online. It's been relatively soft. Indianapolis, it's been kind of past the supply peak. We've seen a good amount of recovery. We're seeing some strong rent growth. Seeing strong rent growth in most of our markets. South Bend, Terre Haute, up near Lansing. Evansville, good, solid rent growth. It's the whole nation, though. It's not exactly the same.
Yeah, totally. I think that in general, the Midwest has been outperforming the market, and in the Northeast too. Midwest has been more consistently kind of the leader if we're talking about regions, but it is we're talking about like Midwest maybe 3% rent growth, and then the South and the West maybe like -1%. So there's a big difference between the rent growth even on average in these regions. And that's kind of erasing some of the higher and lower performers.
Very true.